Hi traders, this is Andrew and I want to show you an example of a bearish butterfly pattern. First things first, we want to identify higher time frame key levels of support and resistance. Looking at this last swing down on the 4-hour chart from the very high to the very low, we want to take our Fibonacci tool and draw the swing in here. Then want to take a horizontal line and run it from the top down and try and find a nice confluence where you have support and resistance with a Fibonacci level. So you can see here, very nice clean resistance level becoming support, lining up with that 70.7 level. So that's the 4-hour key level. I now want to move to the hourly chart. And if you have a look at this last swing down right here, so just move this line across, we have a nice drop off, and then price rallies up to the 79% Fibonacci level and then starts to retrace. So once you get price hitting that 79 level and it starts to retrace, you want to think about possible butterfly patterns. If we go back to that 4-hour chart, you can see that 127 extension is lining up, projection lining up with the 70.7 and that key higher time frame level. So very, very nice confluence there. I'm just going to move this level across here so it's out the way for now. And if we zoom this up, this is actually a 4-hour butterfly pattern. Can be seen on the hourly as well. So that's a swing. We have a nice drop, then price rallies up to the 79 and it starts to retrace. So if we take our fib tool and we draw it from the low now up to that high, you can see we have a nice confluence. Let me draw this in. This is X, A rally up to B. We then retrace. You can see the retracement here. Retracement down to point C, and we're looking for a rally up. Look at that 127.1618 extension lining up with our deeper retracement as well as that higher time frame key area of support and resistance. So very nice confluence there, and that's the area that we're looking to trade. The stop loss on this would go just above the 1618 if you're trading this big pattern, which is about 80 points of risk. So we just sort of follow this along. Okay, price still retracing around. I want to put a limit order in to sell. So if we go to our pending orders, there's a sell limit, and we're going to put it in at 32.70. I'm just going to drop it down about 68. With a stop loss, we said about 70 points. Actually, we'll make it a bit bigger. So about 80 pips, just above that 1618 area, and we're looking to target down towards the lows here. So around the on the big figure 1.3, just above there. Let's have a look to see. Yeah, that looks about good. I'm gonna add in 3 pips, so we're just above the figure. So we put that in there. So let's just have a look. We have a stop of about 80 points or 80 pips and a target of about 260 odd pips. Okay, so nice risk reward. This is a 4-hour pattern, and we just follow this along. It takes quite a while, and you can find these patterns in advance, which is quite nice. So price now gets filled at our level. You can see with this retracement right here, price never ever made a new low on the retracement here, so the pattern is still valid for me. And now the target, once been filled, if you just look at the open orders, target's down here towards those lows. So we just follow this along. Remember, this is a 4-hour chart, so it's taken quite a while to start moving. Good few days. This is more a swing position, and you can see that gap lower filling the take profit. So 265 pips on that trade. We just compress this once again. The level was found from this swing high down to the low. This is visible on a daily chart. Nice area of support and resistance, and then we have the bearish butterfly forming. Very nice confidence right there. You can see price hits the level, sits around there, and eventually it gets going, and you'd have to have quite a bit of patience for this, but these larger swings can pay very, very nicely. Hope you found that helpful.